Are you throwing away fortunes on mortgage interest? Want to pay off your mortgage in half the time? Uncover the secret banks don't want you to know to pay off your home loan 10 times faster. Learn how mortgage amortization works and start paying less interest right away. If you enjoy this content, give a thumbs up, subscribe, share with friends, and support more top-tier videos. Hey folks, how's it going? I'm making another public service video for you grinding in the USA. Today's about slashing your mortgage, your home loan, way faster. I'm not an accountant, but I've learned one crucial thing. The best investment is eliminating all your debts. Don't even think about other investments if you have debt. Mortgages have ridiculous interest rates. The mortgage drama in the USA. Let me break it down. You buy a modest house. Say you finance $300,000, barely gets you a decent home today. You get a 30-year mortgage, standard here, with a monthly payment around $2,500. Here's the scam. From each $2,500 payment, only $600 to $700 goes to the principal. The rest, about $1,800, is pure interest. You're paying more interest than principal. That's why you borrow $300,000 but end up paying nearly $900,000 over 30 years. You lose $600,000 just in interest. Heartbreaking. The life-changing secret: extra principal payments. Here's a tip: extra principal payment or principal prepayment. Just like in Brazil, it's paying beyond your regular monthly installment. You have a mortgage with Wells Fargo, Bank of America, Chase, or any bank. Look for Make Additional Payment or Extra Principal Payment in their app or website. They won't advertise this because they want you trapped for 30 years. Practical application. Notice the difference. Your regular $2,500 payment barely touches the principal. But with extra cash for principal payments, every dollar reduces your debt directly. Simple rule: any extra cash, throw it at the principal payment. When you only pay the regular installment, 360 payments become 359 next month, then 358, and so on for 30 years. But with extra payments, each amount reduces more than just one installment. For example, an extra $2,000 can knock off 4 to 5 payments at once. You don't need to be rich to do this. Listen up. I'm just an average guy, not rich or fancy. You don't need wealth to pay off your mortgage in 10 to 15 years instead of 30. You just need to be smart with your money. If you spend $200 on sneakers, dude, get real. Be wiser with your finances and spend on what truly matters. Any spare cash? Tax refund? Principal payment? Work bonus? Principal payment? Sold something? Principal payment? $300 left at month's end? Principal payment. Sometimes just $500 extra can eliminate 2 to 3 months of payments. Real example of acceleration. Here's a practical example. If you add $500 monthly to your principal, you'll cut your mortgage from 30 to about 18 to 20 years. An extra $800 monthly could reduce it to 12 to 15 years. Think about this. Instead of paying $900,000 over 30 years, you'll pay around $500,000 in 15 years. You save $400,000. No investment beats that. Extra tip: refinancing strategy. If interest rates have dropped since you got your loan, consider refinancing to a lower rate while keeping your original payment. The difference goes straight to the principal. My real story. I did this and already trimmed nearly 10 years off my mortgage in just 2 years, from 30 to 22 years. And no, I'm not rich, just a guy who decided to be clever with cash. I'm even thinking of selling my $20,000 car for a cheaper one and put that money towards the principal. That could shave off another 5 to 7 years. The harsh reality of interest. Consider this. U.S. mortgage interest rates are around 6 to 8% annually. No guaranteed investment matches that return. It's smarter to stop paying interest than to invest elsewhere while owing the bank. Simple math. Paying off a 7% interest loan is like a guaranteed 7% return, tax-free. I want to be completely honest with you. For most of my life, I struggled with money. Bills kept piling up, credit payments drained my paycheck, and every month I felt like I was falling further behind. Maybe you know that feeling too. Like no matter how hard you work, there's never enough left at the end of the month. I used to complain a lot. I blamed the system, my job, even bad luck. But nothing changed, until one day I made a different choice. I stopped blaming and started learning. I opened my mind to understand how money actually works, and that was the turning point. Here's what I discovered. There are real opportunities to save and get ahead financially, but most people walk right past them. They don't see them, or they think it's too complicated. But it isn't. The truth is, once you know how, it's actually simple. One of those opportunities is paying off your home faster. Now, that may sound impossible, but it's not. It's not just about math, it's about freedom. Imagine the relief of not owing the bank anymore, of knowing your house is truly yours. Imagine what you could do with all that extra money every month. That's the shift that happened for me. My entire outlook on money changed. I went from feeling trapped and powerless to finally feeling like I had control over my future. And I'm telling you this because I know it can work for you too. I'm not special. I don't have some huge advantage. I face the same bills, the same worries, the same challenges. The only difference is I chose to take action. And that choice made all the difference. Conclusion. So here's the deal. Throw any extra cash at your mortgage principal. Stop enriching American banks and start building real equity for yourself. You don't need to drop $2,000 or $3,000 at once. Even $200 to $300 monthly makes a huge long-term difference. Like the video? Hit like, subscribe, and leave your questions in the comments. If it's too technical, I might not have the answer since I'm not an accountant. Catch you later, folks. Peace out.